Hey guys, Jeff with OptionBoxer.com back again with another video. Want to discuss kind of a strategy that I've been employing in my own trading. Before we get into it, please know I'm not a registered financial advisor, and this video is not a recommendation for you to buy or sell any security or place any options trade. Just make sure you're doing your own research prior to trading. Admittedly, the titles may be a little bit misleading. I am going to show you in this video how to make 100,000 trading options. But typically when somebody sees a video that says something like this, it's going to show you how you can do it by next week. Well, I haven't found a way to do it by next week. If I had, I would have already been doing that myself. But what I am doing is buying blue chip dividend stocks and selling covered calls. I guess what's unique about this particular post is that I kind of break down everything step by step, so that if you're interested to see it, you can see how I'm doing. Again, not a recommendation, just something for you to consider and kind of some food for thought. When I'm looking for blue chip dividend stocks, kind of a good way to start would just be looking at the S&P 100. I think that's kind of a general way. It's not the only way I do it. I typically try to find what I think is the most valuable based on some valuation calculations that I do. That's also available in the Option Boxer store or here in the shop if you want to check that out. Anyways, the 5 companies I'm going to use for the test today is Bank of America, Dow Incorporated, Kraft Heinz, Coca-Cola, and Pfizer. All of them pay at least a 3% dividend, and that was important for us to receive some of that passive income. And just so it's not egregious, and I'm not starting with a $100,000 account. I'm starting with a relatively small amount of 5,000. If you're just getting started investing or trading options, of course you're going to want to build up to this amount. But you can start this strategy with as little as $100 if you wanted to. You would just have to kind of slowly move ahead and incrementally grow each one of those investments until you're able to start trading covered calls on those investments. But I'm going to start with 5,000. $250 I'm going to contribute to this account, so to speak, each month, and that basically breaks down to $600 per investment each year. I guess what's unique is I kind of break everything down and I kind of show you everything over the last 5 years. Here's the returns for these 5 companies. The initial investment amount you can just see right here. Dividend income. This is just the total dividends received per share per year. So you can kind of see what amount you'd be getting on each share that you own in these particular companies. And then here's where we get into kind of the more interesting stuff. And this is kind of just a general kind of a gross generalization of what amount you could maybe expect to receive. I can't stress that enough. It's options prices are always fluctuating, and it'll depend a lot on volatility and what the market's doing. Bank of America, you could look at 600, Dow 1200, 440, 800, and 1000. Again, those are just gross generalizations. But taking a closer look at Bank of America, you can see I broke it all the way down. I from start to finish, it took about 10 years. And you can see we finished with 19,000. So this number right here isn't the final balance. You have to add in the capital increase and just the any remaining balance, because I'm not factoring in for fractional shares. So the total we finished up with in Bank of America after this time period was 19,945, which is essentially 1/5 of the 100,000 goal that we had at the start. And I kind of go through some assumptions that I made. I assumed right here we would be able to find the money to get 4 more shares so we could start collecting the options income. Going further down, looking at Dow Incorporated, you can see what was surprising. Let's go back up here. What was the most surprising to me, and probably will be to you as well, is that the Dow was down, actually lost 16.3% over the last 5 years. But if you look here at the breakdown of it, because the share price was steadily declining, and again, that was one of the assumptions I made. Obviously, the Dow's not going to continue going down at the same exact 4% rate that it did in this particular example. It's going to fluctuate up and down. But we don't have a crystal ball, so we don't know what it's going to do. So I just, kind of moved forward with this test as if it declined by the same amount each year. But what was really cool is that because it kept declining, we were able to get more and more shares, which meant at the end of this, we were collecting $7,000 in this example per year just in options income, which skyrocketed the number of shares we purchased, which in turn skyrocketed the amount in dividends we were receiving, and left us with a total of $31,958.15 at the end of this particular test period. And that was shocking to me because we also saw that Dow declined by 16% over this over a 5-year period. So even if it had continued, even if the price did continue going down at the same rate that it did the last 5 years, we would still watch our account grow exponentially, thanks in no small part to options, and then of course dividends contributions as well. Oh, kind of the important assumption that I made here is that I just assumed that I would continue contributing $600 in capital each month, or I'm sorry, each year. But that really wouldn't be necessary once we got to once we got to 100 shares, but especially once we got to 200 shares, we wouldn't want to continue contributing $600. We could go ahead and allocate that money elsewhere. You'll see in Kraft Heinz here. The share price continually dropped all the way down to $10.83 per share, and what's remarkable is that we ended up with 23,000, and we only started with 1,000. So it's kind of cool to see that as the share price goes down, we actually are able to get more options in income, and that actually makes a huge difference in the amount overall profit and loss. So it's almost a good thing when the share price falls. Coca-Cola, we were never able to take any options income. We just never got to 100 shares with the starting amount. But again, with Kraft Heinz here and with Dow Incorporated, we probably could have taken some of those contributions and applied them here and ended up getting to 100 shares relatively easily. And then, of course, we would have been able to take advantage of some options income there. But still, we finished with 12,000. Pfizer, again, same thing, not able to take on any options income. But we did watch the share price, march forward pretty dramatically. Although I don't think that will happen, over the next 10 years. It's certainly possible. And if it doesn't, if the share price does fall and we get more shares, then we would be able to take advantage of the options income. So in this example, we finished with 17,339 for a grand total of $105,449.83. So I know what you're thinking. You're saying, well, that's the next 10 years. But, the reality is, if you can make $100,000 off of just $5,000 starting and just a consistent $250 a month, I think that's certainly possible for most people that are willing to invest. If you don't have that much money, you're probably not looking to invest in the stock market anyway. And then once you reach that first 100,000, the next 100,000 will be even easier. So it may have taken us 10 years. And again, this is just going to be a generalization. It may have taken us 10 years to get to the first 100,000. It may only take 5 years, or it may take less. If you look at the returns here on the Kraft Heinz and Dow with some of these options premiums we've taken in, it's not unrealistic to think it would only take 5 years to earn another 100,000. And then once you get 200,000, to get to 400,000 would be even quicker, and so forth and so on before you hit whatever financial goal you have for yourself. But anyways, I'll wrap the video up with that. If you like the video I'm making, or if you like this video, please do consider liking and subscribing to the channel. It really helps me. All right, guys, thanks for watching. Catch you next time.